The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we closed out the week on Friday, a little bit weaker in the grain and oilseed trade, particularly in corn and soybeans. I know we had March options expiration. Maybe that was at play. Maybe we saw the funds moving a little bit here. Maybe especially the corn market got tired of trying to test $5 in March. A lot of things at play, a lot of external factors, news headlines at play as well. Let's talk about some of this. Joining us now on Market Talk, welcoming a new voice to the show. He is the COO for Hedge Plus. Josh Hayes is with us here today on the show. Josh, welcome into Market Talk. It's good to connect with you and have you on the show. Hope all's well.
Absolutely. Thanks, Jesse. I'm happy to be here.
Well, let's just start with the week in the trade for grains. As I kind of indicated, kind of a quiet slide into the weekend, I would say. Options expiration, number of different things at play. We obviously tested $5 on March corn this week. It couldn't really hold it. What's your assessment overall when you look across the grain complex here this week, Josh?
Yeah, overall, the week kind of felt like a plateau week. We're going to looks like we're going to be close to finishing out the week where we started. One of the things it reminds me of, couldn't put my finger on it at the beginning of the week, by the end of the week, I think I had it. Back in October, November, when we were pushing 450 on corn, we had to keep testing it, and every time we'd get to 450, the farmers would sell some more. And we had to kind of clear out, all those sales that were missed earlier in the year. And I think we're just seeing a little round of selling from farmers every time we hit $5 again. That's great though, because at some point farmers will be satisfied with where they're at. And as long as we don't have any drastic change in fundamentals, I think we could push another leg higher here. I mean, we've tested 5 a couple times. As long as we don't see something that pulls us back, we definitely have some optimism that we can go higher. I think we've even projected we think it could go as high as 550. Obviously, we're gonna have when acres, 25 acres production or projections come out, we think it's going to be a little bit bearish for corn. Obviously, I think everybody's anticipating that, but we also have an upcoming USDA where they might cut ending stock some more based on increased demand. So that could be helpful in the short term.
I know USDA is going to throw us some guesstimates this upcoming week with the Outlook Forum and more. So that's going to be a talking point. Weather's out there too. But, thinking about the risk management aspect here, I wonder if there's been some farmers selling this past week on this rally. Beans were up Thursday, especially as well. I guess, what's your perspective on that as you look at managing your risk here? I have to think farmers have to take advantage if it works for their bottom line, right?
Yeah, absolutely. One, we've just noticed that, not just with our clients, but beyond our clients, there was a lot of missed sales last year. And I get it, who wants to get heavily sold and make? So our guys, we weren't behind. We were very satisfied where we were sold on old crop. But we did actually make some proactive sales with corn and wheat this week. We made an initial 20% sale. We're happy with where we are there with that price finally getting above $6, selling out on forward contracts around $6.50, and then on 25 corn we sold 15%. Using December HTAs there. And that's not saying that we think we're, the highs in for any reason, but we do, like you said, it's risk management. We got to a point where you have to be somewhat satisfied with the prices, get a sale in, get a sale done, take some risk out, because what if, we can't count on black swan events. If you look at the market just in general, absent the disappearance of COVID era inflation, we got wars wrapping up. Absent those events, you get back into a typical pattern where corn is going to trade within a $1 range, wheat's going to trade within a $1 range, and soybeans are going to trade within a $2 range. Well, these aren't bad numbers in a normal year. So yes, things can happen. We could have weather coming up in South America. We could have weather later in the year here. We're not selling out by any means. We're leaving plenty of room for those sales. But for people who were way behind on old crop, it wasn't, this is still a good time to make some catch-up sales. And it's definitely a good time to make some initial sales for 25.
Of course, we remind folks that risk of trading futures and options can be substantial. Josh, I'd love your thoughts on the broader picture here as we're still early in 2025. And, we were kind of alluding to it. We've got spring planting still in front of us. We've got a lot of external factors in these markets with what's going on with the Trump administration, trade, tariffs, you name it. There was talk about a China trade deal again this week. So, I mean, crystal ball a little bit here, but what's some of your perspective on the outside influences into the grain markets right now?
Yeah, for sure. We went into the year thinking really that the tariff fears were going to be they were being way overplayed and oversold. We thought that the biggest thing, China is in nowhere near, their economy is in nowhere near the position they were back in 2018. So they couldn't take too firm a stance, against us. And the pain there would be felt a lot more than what the U.S. would feel if things got too dicey or too contentious. So we're starting to see that. When Trump laid out his proposed tariffs, China, had no choice but to respond. And again, these aren't in effect yet, but you could tell in China's proposed retaliatory tariffs or whatnot weren't nearly as severe as what we were proposing, and both sides agreed to talk. And in this past week, it's really come out that it sounds like both sides would just soon come up with a new trade deal as opposed to implementing these tariffs. And I think that goes back to China's economy just really can't handle it, and that could be good for beans, especially. I think everybody knows now that China has gotten themselves in a position where they don't really need to buy as many soybeans from the U.S. anymore. But to avoid maybe a tariff on something else, might they be willing to buy beans that they otherwise wouldn't buy from us? Yeah, there's a good chance of that. So we think that could be part of a deal. And then you got what's happening with corn. Corn, we're probably going to see more. I think not probably. We're definitely going to see more corn acres this year. But maybe instead of that, setting things back here when those numbers get released, we might see the USDA cut ending stock some more via increased demand. And I think just in a really long-term picture, I think we're seeing signs of this, and I think the right things are being said by both Trump and Ag Secretary Rollins, that we've got to find new markets and we've got to find new uses for our agricultural products. So we're excited to see doors open for biodiesel and for aviation fuel with soybeans. And we think that's maybe what happens in the short term is a bridge, maybe a trade deal with China and get them to keep buying beans for a while, knowing that that's not going to last forever, and to develop those biodiesel and those aviation fuels, alternative fuels with soybeans, so that one day we'll be at where we are with ethanol and corn. Well, that will be there with soybeans to just generate that market, because China has invested way too much into South America for us to count on the sales we used to make at the levels we used to make with China and soybeans. But we can probably get a deal done in the meantime to bridge that gap.
It just feels like, Josh, for folks, kind of reiterating what you mentioned earlier, being nimble with your marketing, with all the external factors and everything else going on, just being smart about it and really being nimble, I think is the best word I could use for it.
Yep. We never lock ourselves in any position. Even when we our hedges, sometimes we're limiting our upside on a trade, but that's because we're protecting the downside as well. So we're pretty safe with that. But yeah, as far as being nimble, we don't go into we have moving targets on our cash sales. We come up with numbers, but we're not going to lock ourselves into that. When we get close, we take a look at the market, and when we pull the trigger on a cash sale, it's because we've kind of come to the point where not necessarily we feel strongly that the market's going to go down from here. It's enough factors have built up that the risk that we could go down has increased. And if you kind of stick to looking at it that way, you're going to avoid hanging on too long, or you can't get trapped in the idea that it's just going to keep going up. And a lot of it, as far as on the cash sales side for us, is taking that risk out, making small sales. We're not making massive sales at one time, which happens when you put off sales too long, and then suddenly you're trying to play catch up late in the year, or when people run out of storage, and that's when you end up making bad sales. So we're flexible, and like I said, we don't put in a price target that we don't take a look at constantly and update and take a good last second look before we make a recommendation.
Josh, great thoughts and perspective. As we close it out today, anything final you'd mention or reiterate to folks?
Just that, my big thing is we don't know what's to come. We can't predict black swan events. We can't predict. I know people are talking about dry weather right now, and drought is starting to come back. We had the same thing last year, and then spring rains came and all that went away. So it's really just about keeping an open mind. We do watch the fundamentals. Fundamentals are pretty darn good for corn. They're improving for wheat. That's probably one of the reasons we didn't make a bigger sale on wheat. And then I guess the one last thing regarding livestock, one of the things we talked about when we talked about world economies weakening, and there's reports out today that there's signs of weakening economies. Well, we said that one of the first indicators would be if you start to see cattle prices coming down. And here we are. We've seen cattle prices come down about $15 in the last few weeks. That doesn't necessarily mean that that's the start of economies collapsing, but it's definitely would always be one of the first indicators. So that's something we're watching for right now as well.
Josh, if folks want to reach out to you and the team there at Hedge Plus and have a conversation about their marketing plan, what's the best way to get in touch with you guys?
Definitely go to our website, www.hedge-plus.com. But also, we're quite active now on X, formerly Twitter, at Hedge Plus WI. Either one of those places. Our phone numbers are on the website and on our Twitter handle. And then also we have, just by the same name, we have our YouTube page where we put out our weekly videos as well.
Fantastic. Well, we appreciate you joining us, and we'll look forward to getting you back on the show again in the future. Josh Hayes, Hedge Plus, thanks for being with us, and we'll talk to you again soon.
All right. Thank you. Thank you, Jesse. Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.